Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to provide an update on my Robinhood portfolio. Currently I'm at $349,235. Cash position of $45,275. I also have another $30,000 in a high yield savings account so I can easily deploy into the market when there are opportunities to buy. So most of my portfolio is in US equities and the market has been extremely optimistic even with all the uncertainty. So taking a look at my portfolio, largest position is VOO, Vanguard S&P 500 ETF, which tracks the US market. Figure if you can't beat the market, might as well hold a position in it. This makes up 16.47% portfolio or $50,064. I'm up 27.88% on this position. Next is VGT, Vanguard Information Technology ETF, which tracks the technology sector. This makes up 7.13% portfolio or $21,665, up 136%. Next is Schwab Large Cap ETF, very similar to Vanguard S&P 500 ETF. This makes up 4.51% portfolio or $13,718. I'm up 44% on this position. Some of you have been asking why I have so many ETFs, and actually started off my portfolio with a lot of ETFs, but I plan to eventually liquidate some of the positions and just consolidate some of the assets. So stay tuned on how I'll do that. Next is Apple, which is my largest stock position. Majority of the revenue is from iPhones and their services business is growing. Same with their wearables business. This makes up 8.54% portfolio or $25,960, up 190% on this position. Next is NVIDIA, which makes GPUs. I feel like the GPU market has been growing faster than the CPU market. This makes up 6.52% portfolio or $19,805, up 193%. Next is Alibaba, which is big in the e-commerce space in China, and they have cloud computing solutions. This makes up 5.72% portfolio or $17,398, up 78% on this position. Next is Amazon, which is big in the US market for e-commerce as well as cloud computing. This makes up 4.44% portfolio or $13,496, up 167%. Next is Microsoft, which makes enterprise solutions, whether it's cloud computing, Azure, or their Office Suite products. This makes up 5.11% portfolio or $15,531, up 144%. Next is Visa, which is big in payment processing. This makes up 4.09% portfolio or $12,420, up 87%. Next is Tencent, which makes a lot of online solutions, whether it's social media, fintech, or gaming. This makes up 3.65% portfolio or $11,099, up 61%. So this is big in the Chinese market. Alphabet Class A shares makes up 1.99% portfolio or $6,051. I'm up 47% on this position. So Alphabet, which is the parent company of Google, majority of the revenue is from online ads. And I see them growing as things reopen and people spend more on advertising. Class C shares of Alphabet, this makes up 1.5% portfolio or $44,544, up 52% on this position. Next is Facebook, which makes up 2.96% portfolio or $8,993, up 58.89%. Majority of the revenue is in online ads, and the products include Facebook, Instagram, WhatsApp, and Oculus virtual reality. So a lot of social media, communications, application. Next is Johnson & Johnson, which makes healthcare products, whether it's pharmaceuticals, medical devices, or in the consumer space. This makes up 2.88% portfolio or $8,758. I'm up 16.57% on this position. They also pay a steady dividend yield at 2.6%, so I think it's a good long-term position. Not too big in terms of growth, but solid dividend yield. Next is McDonald's, which is one of the largest restaurant chains. This makes up 2.22% portfolio, or $6,750, up 39.98%. So during these times, they've been steadily recovering ever since March. I think it's a good long-term dividend stock. Next is United Health. You can see that it's doing very well this year. This makes up 2.06% portfolio, or $6,266, up 90.53%. Next is Home Depot, which is big in home improvement. This makes up 1.7% portfolio, or $5,153, up 88%. So a lot of people are doing home projects, and as people are buying more homes, they want to continue to fix and improve their home, so Home Depot will benefit from that. Next is Boeing. This one took a significant dip because a lot of people are not traveling, and as things get to a new normal, people will still not be confident in traveling, but Boeing is also in the aerospace defense industry, so they won't do well in terms of consumer travel, but they'll continue to do well with the government contracts and other defense revenue. This makes up 1.65% portfolio, or $5,227. I'm down 25% on this position. Even though I'm down in this position, I plan to continue holding long term, just because I think in the long term they will pick back up. Next is Costco, which is big in retail and warehouse. This makes up 1.58% portfolio, or $4,805, 53% on this position. So Costco is a lot of the revenue is also from their membership. So a lot of the consumers pay a recurring monthly fee, and that rolls up to the revenue. And the retention rate is actually really solid. So month to month, their retention rate is I think above 90%. So consumers are liking Costco, and even during these times, people continue to shop at Costco because they find a lot of great value at their stores. Next is PayPal, which is in the payment processing fintech space. This makes up 1.56% portfolio, or $4,735, up 157%. Next is, that's not right. I already talked about Boeing. Let's go to PayPal again, AT&T. So AT&T is one of the big telecom players, and they pay a steady dividend yield of, I believe, 7%. This makes up 1.45% portfolio, or $4,414, down 20% on this position. I might add more to this position just because they pay a solid dividend yield, and as 5G picks up, then they'll benefit from all of that. But overall, capital appreciation isn't doing too well, but their dividend yield is solid. Next is Berkshire Hathaway, which is Warren Buffett's company. They own a lot of companies, like partial stake in Apple, as well as the big banks. And they fully own some of the other big companies. A lot of them are in like consumer staples, and those companies won't go away. But this makes up 1.28% portfolio, or $3,884, up 16.69% on this position. Next is Baozun, which is a Shopify of China. This makes up 1.21% portfolio, or $3,673. I'm down 0.55% from this position. Next is 3M, which is a conglomerate industrial player. This makes up 1.11% portfolio, or $3,386, down 12.79%. Plan to continue holding this long term and collect those dividends. Next is PepsiCo, which is another good dividend stocks. They're in the beverage and snack space. Makes up 1.05% portfolio, or $3,195, up 17% on this position. Next is TSM, Taiwan Semiconductor Manufacturing Company. They've been doing very well this past year, and this makes up 0.91% portfolio, or $2,752, up 97%. Next is Nextera Energy, which is in the energy space. Makes up 0.9% portfolio, or $2,726, up 72% on this position. Overall, Next Era has been doing very well this past year and past 5 years. You can see very steady growth. Cisco, which is in the networking solution space, makes a 0.71% portfolio or $2,156, down 5.52%. Next is Activision Blizzard, which is big in gaming, one of the largest gaming producers, publishers. This makes a 0.62% portfolio or $1,887, up 19% on this position. So after Activision is Disney. It's one of the biggest in the entertainment space, and they also have parks and resorts, but those have been closed because of recent circumstance. And once they reopen, I think they'll do well. But in the meantime, a lot of the growth is in the intellectual property as well as the Disney Plus. So hopefully more people are streaming. And what they did recently with the Mulan about the direct to consumer through the app instead of theaters, that actually did really well in terms of the box office hit. So hopefully as they release more movies direct to consumers through the app, they will generate revenue directly rather than through the movie theaters. This makes a 0.62% portfolio or $1,873. I'm up 22% on this position. Next is Baidu, which is the Google of China. This makes a 0.46% portfolio or $1,391, down 31% on this position. Even though I'm down, I plan to continue holding long term. This past 5 years hasn't been doing too well, but I'll just continue holding this position. Next is the Trade Desk, which is big in programmatic advertising. Makes a 0.4% portfolio or $1,226. I'm up 110% on this position. Next is Constellation Brands, which makes beer, wine, and spirits. Makes a 0.18% portfolio or $559, down 15% on this position. Next is Ichi, which is in the streaming space for entertainment in China. Makes a 0.16% portfolio or $479, down 21%. Next is Vanguard Mega Cap Value ETF. Makes a 0.57% portfolio or $1,745, up 19% on this position. Next is Vanguard Consumer Discretionary ETF, which makes a 0.69% or 0.89% portfolio or $2,715. I'm up 99.7% on this position. Last but not least is, actually not two more, Vanguard Healthcare ETF. This makes a 0.62% portfolio or $1,899, up 63% on this position. Last position is Vanguard Industrials ETF, makes a 0.45% portfolio or $1,372, up 25% on this position. So that's all in my Robinhood portfolio. I plan to continue holding these stocks and ETFs and buying more stocks, preferably a good balance between dividend paying stocks and growth stocks. Also plan on increasing my cash position, currently at $45,275. And I also have another $30,000 in a high yield savings account, so I can easily buy when there are opportunities to do so. That's all for this video. What are your thoughts on this portfolio and what's in your portfolio? Comment down below. I'm going to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.